Hey everyone, welcome back to the channel, which is all about income-oriented investing, how to generate passive income from a diversified portfolio of high-yield funds to reach fire as soon as possible. And today I want to talk a little bit about split share funds, everyone's favorite, right, or most controversial in the income world, my world. So a lot of newer investors are scared of split funds. Let's be honest, they're either confused by them, intimidated by them for whatever reason, either because they don't understand the leverage, how it works, the structure, but the main reason is usually the possibility of missing dividends. So this, of course, I've explained it many times. It's built into the split share structure. Of course, I'm really referring to the capital shares or the Class A shares of a split fund, not the preferred shares. Not going to talk about those. I rarely do. Those are very, very boring. So we're going to talk about the Class A shares. So when you do buy a split share fund, you have to expect sometimes, especially with the higher yield ones, the more volatile ones, to miss dividends once in a while. And that could scare people. So in today's video, I want to give you split share fund alternatives. So I want to give you some alternatives to some of the higher yielding or more popular split funds in the community, the ones I feel are the better split funds. I'll give you some alternatives. And when I say alternatives, it has to have the two characteristics of a split share fund: leverage and covered call. So there's plenty of alternatives that are only covered calls or only leverage, but I want to find ETFs basically, or products that have both covered calls and leverage to really give you a good alternative, a perfect alternative to the split share fund Class A share. So let's get to it. All right, everyone. So I want to start first with first of all, the biggest and one of the most popular split share funds in Canada. Of course, I'm talking about DFN, Dividend 15 Split Corp, and I'll also put DGS, Dividend Growth Split Corp, in this category. So we'll look at a few categories. So this is category number one, which I would say is general or the overall diversified Canadian stock market. So DFN, in terms of core holdings, here they are right here. Of course, the biggest chunk is the 6 Canadian banks, but you also have, really the biggest and best Canadian dividend stocks, dividend aristocrats. So you got the 6 banks, you have some life insurance companies like Manulife and Sun Life. You also have Bell and Telus for the telecom. You have Enbridge in there as well. CI, which is an asset manager. They manage the CI ETFs, of course. And then you have some minor stuff like, maybe you'll get a TransAlta, TC Energy, or a Suncor. Of course, if you want to know the exact portfolio, these are the core holdings. You could always go in news and updates, click on fund update, and you'll see the top stocks here. But you'll see that, it's pretty much your core Canadian 15 or so stocks. They're pretty much always the same stock. So this is what I would like to call, diversified Canadian holdings. And I would put DGS under that category as well. This is Brompton's competitor to DFN. So DFN is absolutely huge. I think 1.6, 1.7 billion in assets. DGS a bit smaller with 742 million, but still no slouch in terms of assets. And pretty much the same thing. Canadian equities with high dividend growth rates and high current yields for DGS. So if you look at the portfolio, it's a lot more broad than DFN. There's more than 15 stocks. There's about 25 to 35 stocks or something like that. And you'll see a lot of different companies that are not in DFN, like the railroads and Waste Connections, Nutrien, but you'll see a lot of the same companies as well, the banks and Bell. So DGS and DFN, I would put them under the same category, diversified Canadian stocks, which they usually have between 15 and 20% yield. So what's an alternative? What if you don't feel comfortable with DFN or DGS? Well, my number one replacement that's really specific would be the new HLFE ETF from Harvest. So as we know, I didn't make a video on this, but Harvest just launched enhanced versions of 5 of their covered call ETFs, and one of them is an enhanced version of their Canadian Equity Income Leaders ETF here. So you see, this is the one without leverage. Then they launched this one here, HLFE, which is basically they added 25% leverage on HLIF. So what does HLFE have? Well, if you scroll down, first of all, you'll see a really nice yield of 9.6%. So this is obviously a covered call ETF, and it has 25% leverage. So it has both covered calls and leverage. If you look at the portfolio, you basically won't really see anything here, because you'll just say, well, it has HLIF at 120.7%. So it's HLIF with leverage. But if we click, am I able to click on it? No, it doesn't work. So I'll just have to go to HLIF directly, and we'll see what the portfolio is. So if you click on portfolio, you'll see the holdings, and it's basically a portfolio of 30 amazing Canadian dividend stocks. So the same type of stocks in DGS and DFN. Yeah, you see that here. You see the breakdown. So your typical Canadian breakdown, of course: financials, energy, utilities, telecom, materials. Those are the top ones. So if you look at the holdings, none of these should surprise you guys. You really have the best of the best. So communication services, of course, you have Bell, Telus, Rogers. You also have, in consumer discretionary or non-staples, restaurant brands, which is, I think it has Tim Hortons, Burger King, Popeyes. Canadian Tire. Energy, it's really the five you want to see. The big pipelines: Pembina, TC, Enbridge, and the two biggest oil and gas producers, Suncor, Canadian Natural. Financials, of course, you'll have the six banks, insurance companies, etc. No surprises there. A little bit of materials or gold producers here: Barrick, of course, Eagle Mines. You even have a REIT, and you also have a nice chunk in electricity companies or utilities: Fortis, Algonquin, Emera, Brookfield Renewable. So a nice mishmash of Canadian stocks. So this is a great alternative if you really want an alternative to Canadian diversified, but you want that high yield. Of course, you're not going to get, the high yield like DFN and DGS. You're going to get about 9, almost 10, because it's basically HLIF's yield plus 25%, right? That's exactly what we see here. 9.6. So really, really good alternative. And of course, don't forget that Harvest has an all-in-one called HDIF, and one of the ETFs, one of the 6 ETFs in there is the Canadian one. But if you really want specific Canadian exposure, nothing else, with covered calls and leverage, and you're not comfortable with split fund, well, my top choice would probably be HLFE. HDIV is also another good alternative because it's an all-in-one covered call solution. So it has covered call ETFs and it has 25% leverage. And this all-in-one really tries to track the Canadian market or the TSX 60. So if you look at the sector breakdown, it'll look like a lot like Canada, except it does have healthcare and technology, which Canada doesn't have. So this is an alternative as well, although I would say that HLFE matches it more closely. Now, in terms of, let's move on. So that's the FN DGS. What about financials specific split share fund? So of course, LBS is actually Brompton's biggest split share fund, or was it DGS? No, DGS is bigger. Second biggest, I guess, at 607. So LBS has the big 6 Canadian banks and life insurance companies as well: IA, Manulife, Sun Life, Great-West Life, and the 6 Canadian banks. So there's actually a really good specific alternative to LBS. If ever you're scared of owning LBS, it would be Bank from Evolve ETF. So Bank from Evolve ETFs is an ETF. It's a covered call ETF with 25% leverage, right? Same kind of strategy as HLFE, except it has exactly or almost exactly the stock. You see that here: covered call strategy and 25% leverage. The yield is about 11% last I checked. If we click on distributions, 11.31. LBS, of course, is going to be 14.25. It's very hard to beat a split share fund because the leverage is always higher than 25% typically. But still, nothing to scoff at here. 11.31%. You don't have to deal with the possibility of missing dividends. So this one's relatively new. It came out this year, but consistent 7-cent dividends, haven't missed once yet. And if we look at the portfolio, you basically have a very similar mix to LBS, almost identical. So you have the 6 banks, you have Sun Life, you have Manulife, you have Great-West Life, but you have Power Corp instead of IA Financial. So almost identical. So you're getting pretty much the Canadian banks and life insurance mix, but it doesn't have the structure of a split share fund. So that would be my top choice for an alternative to LBS. Very popular split share fund from Brompton. But what about the most popular, I would say, or the most common split share fund, which would be just the six banks? So you have SBC from Brompton. This is just the six banks. You have BK from Quadravest, just the six banks. You also have PIC from Mulliville, which I don't really cover, but it's the same concept. So if, I would first of all tell you that this is definitely the lowest risk split fund. They rarely, if any, miss dividends. So I would say this is the safest, but still, let's just say you want the Canadian banks with covered calls, with leverage. You don't want that split share structure. What would be my number one choice? Well, you have a few options. There's two options, and I'll tell you which one would be my top. So my top choice. So first of all, you actually have from I always have trouble pronouncing this. Mulvihill came out with ETF not too long ago called CBNK. And you see here, highest yielding Canadian bank ETF. So this is just the six banks with covered calls and 25% leverage. So it's extremely similar. Sorry, I'm not familiar with this website here, but let's just try to find the holdings. Overview. Yeah, here's the overview. So exposure to six big banks with 25% leverage, and there's also option writing to enhance the portfolio yield. The management fee is 0.65%. Here's all the stuff here. So you're looking at about 9.20% yield. Here's the fund. So it has the six big banks where they write covered calls. And you also see this here, Premium Income Corporation Class A. What is that, if you're asking? That's PIC.A. That's actually their split share fund of the six banks. So it holds that as well. So basically, if you don't want a split share fund structure, but you just want the six banks, this would be your most direct option. You'll get an almost 10% yield, which is pretty good. But in my opinion, I think the better option would be bank. I mean, bank, yes, it's the six banks plus insurance companies, but the yield is a bit higher. And I kind of like this one overall better just because of the higher yield than CBNK. But the choice is up to you, everyone. So that would be two great alternatives to the LBS and the financials. And I guess for things like FTN and FFN, which mostly have the Canadian banks and life insurance companies, that could be an option as well. But they do have a little bit, or actually like 40% in the US banks. Bank of America, Citigroup, Goldman Sachs, JP Morgan, and Chase, Wells Fargo. So if you're asking, well, what, to get the alternative, I want those US companies. Is there anything that I could get that's leverage and covered calls? I haven't found one. So unfortunately, when Harvest came out with their 5 enhanced ETFs, they didn't make a version of the US bank. So if anything, you could always add the Harvest US Bank Leaders Income ETF, which is HUBL, or the call. This would be my recommendation for US banks, the call ETF from Evolve, if you really want that American financials exposure, but you'll get covered calls, no leverage, unfortunately. But if ever you're trying to replace FFN or FTN, you could always do bank plus call, for example. So now, is there any other split share funds that we need to discuss? Those are the main ones I really wanted to cover, but I'll quickly go through some other ones. You might be asking, what about GDV? So GDV is pretty hard to replicate because it's really global dividend stocks. And I would say I would consider this a really safe split fund. They never missed a dividend. But hey, let's say you like GDV, you want an alternative. Well, now you have one because they came out with BMAX. They're all in one. Brompton's all in one, which is basically a bunch of Brompton's covered called ETFs with 33% leverage. And in there, you'll have basically this ETF here, which kind of replicates what GDV does, the Global Dividend Growth ETF. You also have European dividend growth, as well as a bunch of other things like low volatility, technology, healthcare, sustainable real assets, and there's also some fixed income. So this will be, an alternative. Definitely not a direct alternative. It's not just global dividend stocks. It's part of this fund. So this is an alternative to GDV. But I will say that GDV is relatively safe. And they also have PWI, the real assets. So is there, which is basically a lot of utility stocks, infrastructure stocks, electricity stocks. And if you don't want PWI, there is HUTE. So HUTE is Harvest Covered Call ETF Global Utilities with 25% leverage. So it's basically this ETF here, the Equal Weight Global Utilities Income ETF, which is HUTL. plus 25% leverage. So you're making a nice 10.2% yield. So that is a great alternative, if you ask me, to PWI, which are making about 11% yield. So really, really good alternative here if you really want that, utilities exposure. So there you have it, everyone. So some alternatives to the really popular split share funds like DFN, DGS, LBS. So we are spoiled for choice. And remember, if you're not comfortable with the split share funds, you have these alternatives. But I would always recommend not to completely ignore split share funds in general, because they really, really have high total returns, especially the ones that focus on the 6 banks. SBC, BK are really they're really good ones. But hey, even DFN, DGS is really, really good. Even with the missed dividends, guys, really, really high yield. I mean, you got to expect some missed dividends with 18, 19, 20% yield. DFN only missed 4 so far in their whole history, and you're getting nice 15, 16% yield. But hey, to each their own. That's the beauty of DIY investing, right? If you're not comfortable with something, no problem. Don't invest in them. You have really, really nice alternatives here, especially thanks to these enhanced ETFs, which have all basically come out in 2022. Absolutely incredible. So there you have it, everyone. Any questions, let me know in the comment section below. Thank you so much for watching, everyone. I really appreciate it. Don't forget to hit that thumbs up button, that like button, and make sure you're subscribed not to miss out on my future content. Of course, hit that little bell next to the subscribe button so you're notified for any new content that comes out. Also, make sure to visit our website, PassiveIncomeInvesting.ca. That's where you could purchase my digital product, the Ultimate DIY Investing Package, which is on version 4 right now. It comes with lifetime updates, so you only have to buy it once, which is awesome. So this is a companion tool. It's a reference tool that will help you build your own portfolio according to your needs and goals, and it covers both the Canadian and American and US stock markets. So make sure to check it out. I have a video explaining from A to Z exactly what the product is. I showcase it, so there's no surprises. If you're interested, make sure to check out that video. Also, right there on my website, on the homepage, I do offer a one-on-one coaching session with me. So this is a 1-hour Zoom call with yours truly for in case you need personalized help. I'll answer all your questions and I'll help you best I can. Just remember, I'm not a licensed financial planner or financial advisor. These are just going to be friendly conversation, right? It's just going to be my opinions. But if ever you're looking for that personalized touch, that personalized help, you could book a one-on-one with me. Make sure to check out the message on top of that calendar. That will give you a status of my bookings for that month. Also, we do have a Facebook group, great Facebook group, over 12,000 members. So make sure to join our community. The group is called Passive Income Investing, a nice Facebook group where everyone is sharing their thoughts and opinions and sharing their experiences. So it's a really nice group. We make sure to stay on top of the scam and the spams, and we delete those right away. So make sure to join our Facebook group. If ever you want something more personalized with us, you could follow us on Instagram. That's where we post more personal things on our adventures here in Panama. So follow us on Instagram if you want. And how do I always leave you? Continue to stay safe, continue to stay healthy, and of course, stay passive. See you next time.